Novak Djokovic here, Tuesday, August 6th, about 6:40 a.m. on the West Coast. Fresh off of my Olympic gold medal, which is the crowning achievement of my career. So Greg asked me if I would do the morning commentary this morning, and I happily agreed. So yesterday was a big down day, but it seemed like it was going to be a lot worse from what happened in Japan, what the futures were signaling. The Nasdaq ended up down about 3.5%. The S&P was down less than 3%. And the market, the Nasdaq and the QQQs held their 200-day moving average. So I think that's the key thing. The bulls held on to that, but the bulls do need to make a stand here today. So that's what I'm going to say about the overall market. Now let's move to some earnings reports. So as I wrote earlier this morning, Uber is crushing. Uber continues to be one of my favorite growth stocks. I think it's going to be a monster over the next 10 years. Mobility and delivery bookings were up 20% in the second quarter. Adjusted EBITDA was $1.57 billion. So it's we're looking at adjusted EBITDA tracking at about $6 billion this year. For a market cap of about 132 billion or somewhere around there. It's 22 times adjusted EBITDA. So I really think it's reasonably priced. They're GAAP profitable now. Love Uber for the long term, even though I think the stock will struggle during a recession, which I foresee. Let's contrast that with Palantir, which makes the foundational software of tomorrow delivered today. That's what it says in their press releases. So, one of the big questions about Palantir is like, what do you guys do? But besides for that, they did have a strong quarter. Revenue was up 27%. But one of the differences between them and Uber is the valuation. So they have about 500 million in adjusted EBITDA through the first half of 2024. So if you say they're going to have $1 billion, the market cap is 65 billion. So they're 65 times adjusted EBITDA compared to Uber at 22. I have a marginal short position in Palantir. It's not working for me, but they really annoy me. Finally, I want to say something about Caterpillar's earnings report. So it was pretty weak, to be honest with you. Caterpillar's machinery and equipment division, which is primarily what most of the company is, I'm going to exclude the revenue was down 4%. They have a financial division, which is somewhat marginal. But Caterpillar, obviously a big capital equipment maker, tractors, all the kinds of stuff that you need in construction. Revenue down 4% year over year. So to me, it's like, to me, it's somewhat of a barometer of capital spending on investment in construction and resources, and it's just blah, just like McDonald's, just like Starbucks, and so I just see a weak economy.